干杯
Cheers.
Thank you.
感谢，
Thank you, everybody.
感谢。
Toasting to a new era, Donald Trump and Xi Jinping signaling the U.S. downplaying military rivalries to focus on deepening investment alongside an audience of top American business executives. But despite the pageantry and a White House invitation for September, the Chinese leader warns that mishandling Taiwan could trigger outright conflict. Live from Beijing, this is Insight with Haslinda Amin, where we dive deeper into the stories that matter with crucial context and sharp analysis. Trade Representative Jamieson Greer telling Bloomberg he expects China to commit to double-digit billion-dollar annual farm purchases over the next 3 years as part of agreements to rebalance trade. Joining the show exclusively is the former U.S. Trade Representative, Katherine. We'll ask her whether Washington is trading away its leverage. Plus, reassess the pageantry versus the substance with the president of the National Committee on U.S.-China Relations, Stephen Orlins. And also on the show, clearing the decks for Asia's richest person, Gautam Adani and his nephew agreed to pay $18 million to settle SEC fraud allegations.
It was a fantastic day, and in particular, I want to thank President Xi, my friend, for this magnificent welcome, and it really was a magnificent welcome like none other, and for so graciously hosting us on this very historic state visit. We had extremely positive and productive conversations and meetings today.
The people of China and the United States are great peoples. Achieving the great rejuvenation of the Chinese nation and making America great again can go hand in hand. We can help each other succeed and advance the well-being of the whole world.
Presidents Trump and Xi speaking after their Thursday meeting in Beijing. The two leaders are about to meet again to wrap up Trump's two-day visit, but despite the focus on ceremony and business deals, the key message from the Chinese leader is his warning that mishandling Taiwan could lead to clashes in a highly dangerous situation. U.S. Trade Representative Jamieson Greer has told us he expects China will commit to billions in American agricultural purchases. Speaking exclusively to Bloomberg here in Beijing, Greer also addressed U.S. efforts to narrow the trade deficit with the world's second largest economy.
So remember, we're in a situation where we're trying to rebalance our trade with China. We've had a lot of success in that. Our trade deficit with China went down by a third last year, in 1 year. And so we're trying to manage the trade around the kinds of things we want to be selling to China, whether it's Boeings or soybeans or other ag or energy or medical devices. And so you can see us bit by bit building up this strategy. Coming out of this week, you heard the president today talk about the Boeings and hundreds of Boeings being purchased by China. We already have a soybean deal with them from our prior meetings of 25 million metric tons a year over the next 3 years, and we expect to also see an agreement for double-digit billion purchases of ags over the next 3 years per year coming out of this visit, and that's more general. That's aggregate. That's not just soybeans. That's everything else.
Are they keeping up with those agreements?
They have been. So on the soybeans, last year they needed to fill up 12 million metric tons at the end of last year. They did that. They've now, we We expect most of the soybean sales to go on in the later part of the year, but we've seen some there already. We saw, as you noted, things related to beef exports, registrations re-upped last night. So we're already seeing them start to fulfill some of their promises.
When it comes to the détente, we have this trade agreement truce till October. Will that be extended on this trip?
So we'll see about that. We have of course the agreement that goes until this fall. That's all solid. That's all well and good. There's certainly a willingness on both sides that if this continues to work out well for each country, to continue that and to extend this ability to make sure we're getting rare earths, that we're selling the types of things we should be selling to China, and we're trying to manage differences rather than escalate them.
We hear that some firms, China is dragging their feet when it comes to licenses on rare earths. Was this discussed?
We do discuss this. We discuss this at all levels.
And do you think they are dragging their feet?
So with a couple of things, sometimes they do. I would give them a passing grade on this. We've certainly seen the rare earths come back up to better levels. Sometimes it's slow. There are times when we have to go and make our point. You may have seen a couple of weeks ago there were some big shipments of yttrium that came across. That was after advocacy from the U.S. government. So whenever we see an issue or we hear from specific companies, we engage with our Chinese counterparts and we find them to be constructive.
Where does this leave the 301 tariffs? Will China view this as retaliatory, given the fact that it seems like the relationship right now is stable and you're in the middle of this détente?
So I haven't yet met a country where we've imposed tariffs and they said, thank you, we love these tariffs. So no one really likes that other than our workers and our industries. What the Chinese know and what we've agreed that there's going to be a certain level of tariff on the Chinese. So I think as we're rolling out and concluding different investigations under Section 301, which again don't just target China, they cover other countries as well. I think the Chinese are going to be looking at what we're doing there compared to agreements we've had in the past on certain tariff levels, and we'll just have to try to manage that.
And that was U.S. Trade Representative Jamieson Greer speaking exclusively to Bloomberg here in Beijing. Well, our next guest is one of the most influential voices in U.S. trade policy. Katherine Tai served as trade representative in the Biden administration, and she joins us now from Washington. Ambassador Tai, good to have you with us on the show today. It does seem like this summit has been heavy on optics, symbolism. Has anything really been achieved substantially?
I think that, as with many things, but certainly these types of events, the symbolism is probably the product. And what's quite interesting is for all the ways in which the Trump administration, President Trump, especially in this second term, have really broken norms domestically and internationally, this particular trip looks very classical, almost like it could have been any other president's trip to China.
Interesting that we heard from Jamieson Greer that a lot has been achieved in terms of a rebalancing of trade between the two countries. Is this a new norm? I mean, it's not about expansion of trade, it's rebalancing, trying to recover what's been lost.
I think what is interesting is a lot of people don't fully appreciate when the Trump administration talks about rebalance when it comes to trade. It is another way of saying that they are looking to create new winners and losers, different winners and losers from a longstanding policy here on trade. So I know they always point to the trade deficit, and that is one indicator, a very easily understandable indicator, usually represented by a single number. But when I hear Ambassador Greer talk about the need to rebalance trade between the United States and China, I appreciate that he's talking about more than just the trade volumes. He's talking about the trade volumes, but more than just the trade volumes. And I think that that is actually a really important standard to be applying to this summit and whatever outcomes may be coming from it when it comes to trade. At first glance, it does not look like, from the symbolism around the summit to the personnel that are brought onto the summit, to the private sector delegation, that is accompanying the president to this summit, it does not look like a real rebalance is happening. If anything, this looks like more of the same, and maybe even a more extreme version of what came before Trump in terms of the U.S.-China trade relationship.
Should you be talking about winners and losers when what's been agreed upon back in Busan have not even been fulfilled? If you take a look at the commitment from China to buy 25 million metric tons of soybeans, that has yet to be fulfilled. How do you talk about winners and losers at this stage?
I think that's a really good question. And let's talk about who's winning and who's losing. When you look at the soybean trade, I think American soybean farmers are going through an enormous amount of anxiety in this year. Not only is the trade with China uncertain and a point of anxiety, there's been special deals cut with Argentinian farmers, the big Argentina bailout that has come at the expense of American commodity farmers. There is also the overall challenge that we have in terms of rising prices in the United States, and then the challenges with access to fertilizer supplies. So it's one thing to look at a particular metric when it comes to a dollar amount for what China may or may not be committed to purchasing, whether or not they purchase it. It's another thing to put those numbers into the context of what is happening in the U.S. economy and what is happening for the actual producers, consumers, and workers in this economy. You wouldn't know by watching the footage and watching and listening to the talking points coming out of this summit that the U.S. economy for ordinary middle-class people is going through a significant amount of disturbance and turmoil today.
Ambassador Tao, you can't help but look at the numbers. I mean, just a deal to do with those Boeing jets, 200, when, the market was actually looking at 500. It's also a far cry from the big patches that was made back in 2017 when Trump was last in town. That was 300 jets. I mean, how are you reading all these numbers and the kind of commitment perhaps China may or may not be showing in terms of trade with the U.S.?
I think that this is a very obvious performance that is going on both sides, on the U.S. side and the Chinese side, taking place on the stage in Beijing. In terms of those Boeing purchases, China has owed Boeing purchases going all the way back to 2020, and that first Phase 1 agreement that was inked between the Trump administration, its first term, and China. Those purchases have been held in abeyance for these past 6 years. And when you look at that context, then set aside the expectations around and the comparisons to the number of jets that were purchased before. But if you look at the number of jets that haven't been purchased, that 150 number looks terrifically modest today.
It's not just about soybeans and jets. It's also about chips. We know that the addition of Nvidia CEO Jensen Huang came pretty last minute. We also know that the U.S. has greenlit H200 chips. I mean, how are you reading that, bearing in mind that, the U.S. has talked about national security, and here it is green lighting the H200. How do you square that?
I'm not sure how they square it, and it's the job of this administration and the leaders in terms of economic policy, national security policy, foreign policy, to square that. It is very unclear to me as an outsider watching the signals what the principles are that this administration is pursuing on behalf of the United States in navigating this enormously consequential but complicated and difficult relationship with the People's Republic of China. There is clearly a need for a reset in terms of the relationship. I think that the overall tone of doing deals, and these very, very wealthy CEOs going on this trip to Beijing really undermines any message that this administration has put out there around the hard realities and the hard truths that need to be spoken between Washington and Beijing.
What's also interesting is the fact that despite the U.S. green-lighting the chips, China ain't buying. I mean, it speaks to the deep distrust, doesn't it?
It does. It speaks to deep distrust. It speaks to a growing dysfunction in this relationship, which I agree is imbalanced. The People's Republic of China is the world's largest producer and manufacturer and exporter of goods. The United States is the world's largest importer and consumer of goods. When you look at this particular relationship, you see the degree of distortion and mutual reliance that these two economies have on each other. It is driving a very significant economic unhealthiness and political disturbance here domestically in the United States. And I don't see any of those issues on the table being taken up in these conversations with China.
Do you see further decoupling between the U.S. and China, especially in technology, and is that decoupling perhaps irreversible now?
You know, it's really hard to say whether I see it or not. Again, going back to the lack of clarity around the principles driving this relationship for this administration, I did hear in the clip the piece about the Board of Trade being about a U.S.-China conversation around the goods that the United States wants to sell to China. I did not hear Ambassador Greer include chips in his list of products, and yet there are at least two big semiconductor company CEOs on this particular trip trying to sell their product to the Chinese.
And we know that U.S. chips are being used as a leverage for the U.S. If the Chinese continue to refuse to buy the H200, do you think the U.S. runs the risk of losing this leverage?
I don't know. I mean, I think there's the H200 chips, right? There's the AI chips. Interesting to see that other than Elon Musk, none of the AI CEOs are on this trip, and part of that is because the AI company CEOs are driving a narrative that they need to receive all of the benefits from the U.S. government and the U.S. taxpayer in order to outcompete China. There are a lot of, when you look at the actual signals that are coming out of these few days in Beijing, there's not a clear signal that comes out for discerning people like your Bloomberg viewers, and I don't know what to make of this.
And another thing that's not clear is actually rare earths. We've seen China weaponize rare earths, sending the U.S. to its knees when it withheld those supplies. I'm just wondering, do you see China doing that again?
That is a tremendous leverage point of holding a choke point in the global economy, in a critical area that is affecting so many relevant and upcoming technologies and industries. There's no reason why China would give up that particular leverage, from my point of view.
And what can the U.S. do? The U.S. has talked about perhaps, producing its own 100,000 batteries annually, which is half of what the world needs in 3 years. Is that even realistic? I mean, what is the path forward for rare earths for the U.S.?
I think it's going to be really hard. We, the United States, and the rest of the world have allowed for China to develop this completely dominant position in the global market on rare earths. And it's not that it's a problem that caught us by surprise. In fact, in the early 2010s, When I was at USTR the first time around as the chief counsel for China trade enforcement, I led a team that litigated a WTO case, that's at the World Trade Organization, against China on export restrictions the Chinese had placed on rare earths. We won that case, but looking back, we clearly won the battle, but are losing the overall struggle, because today the United States and similarly situated countries in the rest of the world are actually worse off when it comes to access to Chinese rare earths or rare earths in general. And I think a really important aspect of this, which speaks to the larger challenge of trade relations with China for the United States and for much of the rest of the world, is that this version of globalization, of trade liberalization that we have been pursuing for the last 45 years, has resulted in a massive concentration and consolidation, not just in rare earths, but across multiple really strategic sectors China now holds as choke points. And for the rest of us then, the question is, what are the hard truths, the hard conversations we need to have with ourselves and with Beijing in order to evolve our situation so that we can turn down the dial on geopolitical temperatures and pressures so that there can be more resilience and more supply chains that run through more parts of the world. And I think I see evidence of some of that work coming from the Trump administration. It is entirely unclear to me whether any of that is being taken up in these conversations.
Do you see a different China? Is this a China that's more confident because it is dominant in the space of rare earths?
Again, not just rare earths, right? Solar panels that we've seen over time, EVs and EV batteries. I think this goes to a diagnosis that had become very, very clear, certainly at the end of the Biden administration, which is around the over buildup of capacity in China in all kinds of manufacturing sectors. And the linking of the reality today that China is responding to its own economic challenges by doubling down on its dominance as a manufacturer, threatening a second China shock for the United States and the rest of the world, with all of the concomitant challenges to jobs, to communities, to industries, and to domestic politics. And what I find very interesting is that with all of the rhetorical talk that members of the Trump administration will parrot around advancing economic and trade policies in favor of the working person and working class, none of that is on display, and very little of that conversation around the China shock that is here in its second iteration, or the need to respond to this doubling down in terms of China's export dominance. None of that has really been in the mainstream conversation. And my fear is that none of that is actually being addressed in Beijing at this opportunity between the two leaders.
Ambassador Tai, I also want to touch on the 301 tariffs. What's the status of those tariffs? Are they indeed undermining U.S. competitiveness?
Let me answer the first part of your question first, which is there are a lot of 301 tariffs. They're the ones that were applied in 2018. Those were the ones that were China-facing. There have been 76 301 investigations that USTR initiated about 2 months ago in the middle of March, about 2 weeks after the IEEPA tariffs were declared unconstitutional and the Section 122 tariffs were put in their place. My expectation is that these investigations will probably wrap up with remedies announced in time for the Section 122 tariffs to either expire at the end of July or to be declared potentially unconstitutional again by the U.S. court system. When it comes to those new 301 tariffs, again, there are 76 investigations. that are looking at 60 different trading partners. China is facing two sets of investigations, one for the overcapacity in manufacturing sectors, and the second one for failing to have a forced labor import ban. I think that in the conversation with Ambassador Greer, the question about what should happen if those investigations turn into tariffs and whether or not that will implicate the Busan Truce, I think you saw Ambassador Greer really be restrained in his response. But my reading between the lines is that inevitably, should those investigations come out and manifest new tariffs that are directed at China, that those absolutely will impact the Busan Truce and the dynamics going into any potential fall return state visit.
How about in terms of how perhaps the 301 tariffs are making the U.S. less competitive? I mean, it does add to import costs, especially manufacturing and AI. What's your take on that?
I don't know how you separate 301 tariffs from the IEEPA tariffs, from the 232 tariffs. We are living in a very, very heavy tariff environment. And as a former trade representative and someone who has made my way in the world, really focused on trade policy, the tariff for me is just a tool to accomplish an objective. And I think that the question for the United States under the second Trump term today is, what are all of these tariffs supposed to be accomplishing? And that also is not clear to me.
Ambassador Tai, just one final question, and in 30 seconds before we wrap it up, I'm just wondering, what's the biggest risk out there in terms of relations between the U.S. and China right now? What keeps you up at night?
My concern is that this administration fails to deliver on a coherent policy with clear principles that are keyed to learning lessons from the past. We cannot afford to keep making the same mistakes over and over and over. The mistakes that we've made in the past have led us to today, which is a less peaceful, less and potentially less prosperous world.
We have to live with the Ambassador Tai. We thank you so much for your time. This is Bloomberg.
It says you can do it in 15 minutes.
Welcome back. You're watching Insight. We're coming to you live from Beijing. Chinese President Xi Jinping has warned the U.S. that Taiwan is one issue that could lead to clashes between the superpowers. There was no official response from the Trump team to that warning. And Secretary of State Marco Rubio says the topic of U.S. arms sales to Taiwan did not feature prominently in talks. Rubio also told NBC News that U.S. policy regarding the self-ruled island remains unchanged.
What they call reunification, that's what they call it, is something that has to happen at some point. We think it would be a terrible mistake to force that through force or anything of that nature. There would be repercussions for that globally, not just from the United States. And we kind of leave it there. That sort of ambiguity is what I think has defined the way we characterize this issue. And the reason being strategic ambiguities. We don't want to see conflict. We don't want to see something disruptive happen, because I think it would be very disruptive for the world and for both countries.
Let's bring in our Chief North Asia correspondent, Stephen Angle. Steve, Rubio saying, the U.S. doesn't want to see a conflict over Taiwan. And, we heard from Xi Jinping just yesterday drawing that red line, talking about a possibility of a dangerous situation if the U.S. doesn't treat it properly.
Yeah, that's right. And not to correct the Secretary of State, but China doesn't call it reunification. They call it unification, because it was never separate from China. But I get into semantics here, obviously. I think that really overshadowed a lot of that 2.5-hour state visit in the Great Hall of the People, supposedly behind closed doors. Some of the open mics were there and comments were heard. But again, what was interesting about this was that state media put out Xi Jinping's comments comments to Donald Trump about Taiwan well before that meeting ever ended, essentially saying, you know, the most important aspect of China-U.S. relations is the situation with Taiwan. If that situation is handled well, ties will flourish. If it is not handled well, it could lead to a very dangerous situation. Perhaps Xi Jinping's most blunt statements on Taiwan, especially face-to-face with the U.S. president. So, yes, that sort of overshadowed what we all thought was going to overshadow these talks, and that is the situation in Iran. I'm not necessarily saying that the dynamic over Taiwan has changed. I just think Xi Jinping took this opportunity to hammer home the point that Taiwan is critical. And, oh, by the way, when you go back to Washington, D.C. on Air Force One later today, and you have that on your desk, the $14 billion arms package to Taiwan, you might want to reconsider how far that will go in deteriorating whatever détente or cordial relationship we had yesterday at the Great Hall of the People. So again, nothing is done haphazardly with the Chinese. They are very strategic. And the fact that they sent it out before the meeting ended yesterday indicates to me that they wanted to get a jump on the narrative before we in the media assumed that the Iran situation was going to dominate the talks.
Right. And needless to say, Steve, Taiwan was watching very closely. It's up in arms on the back of that conversation.
Yeah, absolutely. I mean, the arms sales, issue, as well as a special arms package was most recently approved by, the legislative yuan in Taipei, dominated, of course, by the opposition party of Lai Ching-te, and that has been a contentious issue as well. So I think this latest arms sales proposal, or the one that has been essentially stalled right now, waiting executive approval in the United States, is a key part of what Lai Ching-te, the president of Taiwan, wants to see, and that a strong deterrent is a good way to keep the status quo. So, yes, a lot of people in Taiwan were awaiting the outcome of this summit to see how far that went. But you know what? Sort of uncharacteristically, Donald Trump sort of stayed silent when he was asked about Taiwan and why the United States didn't put it in its readout of that meeting, because again, it is a hot button issue. Anything that Donald Trump says on that changes the longstanding dialogue or the longstanding position of previous administrations and his administration could potentially give a win and a feather in the cap of Xi Jinping. So yeah, it was a little bit of a tricky situation there for Donald Trump. And again, Xi Jinping is picking away at that scab. He would like to see the Trump administration say they oppose independence. The Biden administration says we do not support Taiwan independence. It would be much stronger if a U.S. president said we oppose Taiwan independence. So again, back to semantics.
That's right. And we haven't heard from the Trump administration that it opposes Taiwan's independence. There are lots of hot button issues, right? It's not just Taiwan. It's also soybeans. It's also rare earths. And when you take a look at the readout from both sides, they were not mentioned at all. I mean, are there indications we might just be hearing, the commitment from China to provide a consistent, steady flow of rare earths to the U.S.?
Yeah, well, we heard from Jamieson Greer in that great interview with our colleague Anne-Marie Hordern, essentially saying that he would give a passing grade so far to the Chinese on their license approvals for rare earths. So that's a pretty good assessment of how they feel right now. Yes, there's been fits and starts. It's been a very difficult year of U.S.-China commercial relations and geopolitical relations, with tariffs going as high from the United States on Chinese goods, upwards of 145%. There were retaliatory tariffs, of course, and export controls, entity lists, and the like from the Chinese, and they really found their strength and their leverage through rare earths. So right now, we're seeing the rare earth magnets, which China, by the way, controls about 90% of that global supply. They are moving, they are getting export license approval. But again, at any time, if things go sour, and we've seen fits and starts in this relationship, China has that lever to pull.
And also when it comes to soybeans, we know that not only has China not been committed to what it said it would do back in Busan, it's also exploring alternative, cheaper sources, cheaper markets like Brazil. That's
Sure.
not a good look.
Yeah, but again, if you have leverage, you use it, and China used that leverage. And I'm not taking sides here. Don't on the internet. Don't read anything that I say as taking sides. I just see it as it is. China, of course, through the period of assault of tariffs, of course they did what any nation would do. If they have alternatives, they will source other areas. And you mentioned Brazil, and that's what they have done. From that first trade war in the first term, over the course of the Biden administration, they really did, future-proof their supply chain as far as sourcing soybeans. They have to import soy, which is a big part of the national diet. And again, that also leads to, let's not just harp on the negatives. Let's look at some of the positives here that have come of this summit, and that is Donald Trump is saying the Chinese are going to start buying U.S. beef again. In fact, those import licenses of U.S. beef have been approved for hundreds of U.S. slaughterhouses, but that was also a lever that China used. China, when the tariff barrage began last year, about 14 months ago, when they cut off those and they stopped approving those import licenses for beef. According to the U.S. administration now, that has been remedied. U.S. beef should be back on Chinese tables soon. So there have been victories on the agricultural front. Steve Daines, the congressman from America, has been sort of the envoy on trade. I'm not saying he's replaced Jamieson Greer, but he kind of came as a friend of Donald Trump, not only last year to the China Development Forum, he was here just a couple of weeks ago as a pre-trip, trying to sort of warm the plate for the summit that is happening right now. He has been a big advocate of those agricultural states in the Midwest of the United States, including the beef lobby. So that is a victory for the United States, for China to remedy that situation.
Let's pick up on the positives. It does feel like the two leaders have a different chemistry, right? I mean, despite being at loggerheads when it comes to trade, at this particular summit, they've been pretty complimentary of each other. We didn't see that big fat hug from Xi Jinping, which Donald Trump was expecting, but we did see both leaders smiling from ear to ear, obviously quite comfortable with each other. The question really is, that is enough to show that we could be a reset in relations between the two countries.
Sure. I think as I was watching that, is he going to hug him? Is he going to hug him? That would have been awkward, wouldn't it? It wouldn't have been part of the protocol to have a big hug on the red carpet in front of the Great Hall of the People. I know it was more of a figure of speech. But, again, there was no... you remember back, back in the Biden administration when the Chinese side met the U.S. delegation up in Anchorage? It was frosty, and it was on U.S. soil. It was the Chinese sort of lecturing the Americans about how to foster a positive relationship between the two. There was no lecturing, at least before the cameras this time. It was saying the right things. There was a lot of flattery, cajoling a little bit. And the way I read it and the way people I've talked to here in Beijing read it, they say this could be sort of even though there are not a lot of deliverables, let's be honest here, right? So far, there still could be. Donald Trump has not flown out yet. He leaves mid-afternoon on Air Force One. He's still having tea right now and photo ops in Zhongnan High. On the other side of the moat here of the Forbidden City. There's still time to have those deliverables. I see this as, once these two leaders have mutual respect and have a good interpersonal relationship, it will provide a platform, if not a small springboard, for more dialogue down the road this year. China is hosting APEC. U.S. is hosting G20. All those ministers of each country are going to be hanging out with each other in the same ballrooms in same cities. They're going to be talking. So this is a good opportunity. So it didn't go pear-shaped, this summit so far. There's still time, though.
That's right. Better to be talking than fighting. Definitely the case. Our Chief North Asia correspondent, Stephen Engel, we thank you so much for that. And do stick around. Meantime, Franklin Templeton CEO Jenny Johnson, in an exclusive interview to Bloomberg, emphasized that mutual economic dependence continues to drive the dialogue between Presidents Trump and Xi.
The U.S. needs China and China needs the U.S., right? And so there's always going to be this opportunity to coordinate. You want them talking. I mean, as Trump said, you know, we're now having conversations. President Xi said we need to be able to be more cordial and work together. We need each other. The good news is, I think there's a recognition of that. And so when you look at who the delegation is, both parties have brought to the table kind of what each other needs. I think that the other side of this is there will always be a distrust around technology, but the fact that you have, you know, Elon there, Jensen there, Dina from Meta there, right? Like, that's a sign that the U.S. is coming in to have conversations. We need them. We need them for rare earths. I think, you know, that's just the reality.
What do you see? I mean, the market are very optimistic, right, in general, even despite, and that's partly driven by technology, despite everything that we're seeing in the Middle East with no real resolution in sight. Is there too much euphoria when you speak to clients? What are they telling you?
Well, if you look at it, just in this first quarter earnings, 85% of the companies beat their projections, right? I mean, like, that's, and it's a broad base. This is not just a technology AI driven. That's the reality. The U.S. market is very, very, and the economy is still very healthy. And so I actually think that the market, there's reasons for the euphoria around it. And I get it, that there's partly the U.S. is a little bit as a energy independent. We're a little bit more isolated from some of the problems in the Middle East, which it means that it's having less of an impact on it.
I mean, is there anything you worry about? So you're here in London for an IPO from Uzbekistan, which I'll get to in a second. But do you worry about inflation? Do you worry about private markets? Is there something underlying that you could see some dislocation, or something that makes you uneasy?
Yeah. So here's what I'd say. Look, I think inflation. I think the market has underestimated the realities around inflation. I know that there's this lot of concern that's raised around Kevin Warsh and will he be independent? The reality is, remember, it takes 12 governors to vote for whatever the changes are in rates. And Kevin Warsh's term, it's going to be 2 years under President Trump and then 2 years after that. So he's got to look at his legacy, too. I think he's going to be very practical. So I think inflation, the reality of inflation is it's sticky, and it's probably, going to be more difficult than even the market. I think the market's probably underestimating it a little bit.
So you're here in London because there's, a company from Uzbekistan that listed, which so far 24 hours has been doing very well. I mean, are you expecting more companies to list?
Well, so let me give a little bit of background on that, because it's actually very unique. So this is the Uzbekistan government has been very progressive with the reforms. Actually have one of the top performing economies. I think this current quarter they're at 9% GDP growth. Last year they were almost 8%. And so what they've done is they've hired Franklin Templeton to help them privatize state-owned enterprises. So they contribute into a fund, 13 companies. They cover transportation, utilities, financial services. And in that fund, we actually have the ability to change management, control the corporate governance. So what they're trying to do is bring FDI and foreign direct investment into Uzbekistan to help them do the reforms.
And that was Franklin Templeton CEO Jenny Johnson speaking exclusively to Bloomberg's Francine Lacroix. Now, we're just momentarily awaiting the opening of the Indian markets. Of course, this is one market that's been an underperformer. The Indian rupee has also been testing record lows. One stock we're keeping an eye on is Adani Enterprises. Of course, Gautam Adani and his nephew Sagar have agreed to pay a total of $18 million to settle the Securities and Exchange Commission allegations they made false and misleading representations about Adani Green Energy. The SEC, of course, alleged that Adani spearheaded an effort to pay or promise hundreds of millions of dollars in bribes to Indian officials to induce them to enter contracts that Adani Green needed to develop India's largest solar power plant project. Let's take a look at where they're trading right now. We have Adani Power currently up 0.8 to 1%. All the other Adani Group stocks are also in positive territory. This is something that's been weighing on the company for the past 1 year. Well, we'll have more on that later on. Gautam Adani is looking to beat, of course, all the pessimism around that stocks. Please stay with us. This is Bloomberg. Welcome back. You're watching Insight, coming to you live from Beijing. As the Trump-Xi summit wraps up, investors' focus seems to be returning to the inflationary impact of the war in the Middle East. Avril Hong is here for a look at markets. And Avril, risk sentiment is souring pretty much across Asian assets.
Yeah, even those AI stocks are not spared today, given how Trump is talking about, hey, we don't need the Strait to reopen. It sounds increasingly like the U.S. might be in the early innings of a forever war, and you're seeing that risk management across the board, more or less. Even the TAIEX, which at one point jumped 1.5% amid optimism for Hon Hai, thanks to its profit jump. This is, of course, an Nvidia partner. The TAIEX is sitting quite flat or down about 0.4 now. The Kospi hit 8K earlier, and you're looking at these declines now by the most since early April. Now, flip the board, I think it's also, as you highlighted, the inflationary impact on the war, and that's really showing up in Japan data. PPI for the month of April, the highest since 2023. That's putting pressure on Japanese bonds. You're looking at yields across the curve, the 2s to the 30s, the highest level since the 90s, particularly on the 10-year today. We are seeing it at one point moving as much as 7 basis points. Has?
And Avril, looking at India, the impact of the Iran war continues to show.
Yeah, and today we are, of course, looking at the market impact from how India has hiked the prices for petrol and diesel. So far, we know how state refiners had been absorbing most of the losses, well, no longer. And it looks like this deepening energy crisis is affecting, as you know, India. We are also watching how, in terms of the market impact, it's the further efforts to perhaps help the rupee, given how they are imposing further curbs on gold imports. Today, we are also watching stocks flip the board against the backdrop of what is happening globally, given the Trump-Xi meeting, but also this group of stocks. The renewables theme has been driving some of them in the Adani group so far this year, especially amid the war. But of course, investor focus is also turning to the reaction, given how for the founder and chairman, it does look like these U.S. legal threats might be behind him. We're turning lower on these group of Adani stocks. Has?
Avril, thank you. So Gautam Adani is on the cusp of ending a series of legal threats in the U.S., agreeing to pay millions of dollars to settle allegations, including fraud and bribery. Let's get the details from our media and telecoms reporter, PR Sanjay, joining us from Mumbai. Take us through the details. Sanjay, we know that this is something that's been overhanging the Adani Group for about a year.
Yeah, thank you, Haslinda. Which means the legal shadow which has been hanging over Adani Group and Adani chairman Gautam Adani and his nephew Sagar Adani is now slowly vanishing. There are three elements. There were three cases. One is by Department of Justice DOJ and SEC, and third one is Office of Foreign Assets Control. And these are three cases which was like literally hindering Adani from further capex in globally, etc. And now what we are picking up is that they're going to, DOJ is going to drop all the cases as part of settlement. And in the case of SEC also, they're going to settle by paying around $18 million. And with OFAC, they're going to settle with around $275 million, which means they're not admitting it, they're not denying. It's going to be complete permanent closure for the legal woes which is faced by Adani Group and Adani's chairman Gautam Adani and nephew Sagar Adani. So this is going to be a big boon for Adani, and now the legal path is very clear. So the critical thing is it's not about lobbying, it's not about furthering this cases further, but this is going to be permanent closure through a legal framework. So this they're expecting a kind of a clear-cut order in a week or so. Now there's a clear path ahead for Indian conglomerate Adani Group.
It is a huge relief for the Adani Group. You got to wonder whether this will also now help to unlock Adani investments in the U.S. I mean, huge investments in the green sector in particular.
Haslinda, if you recall, when Trump has won the elections, Gautam Adani has congratulated him, and he's also promised a $10 billion worth of investment in the U.S. And immediately after that, there was a case by DOJ and SEC and OFAC. So these things have actually cleared, and they quite clearly said that the investment in the U.S. is not possible without clearing the charges. And they were fighting, and they've denied all the charges. Now, what we are picking up is they have restarted the talks with U.S. authorities to invest in data centers, green energy, and infrastructure with around $30 billion of investment. And if you have seen, already they've started raising funds from U.S. financial investors, and they have partners like Meta, Google, and Microsoft for data centers. So what sources are saying that there could be a data center embassy which will belong to not just to limited to India, but in the U.S. as well. But these investments will finalize only when they get clear and clean chit from DOJ, SEC, and OFAC.
Sanjay, just very briefly, this means that we could see more expansion from the Adani Group, yeah?
Exactly. Two things. One is the clear-cut expansions, because Gautam Adani literally could not travel to US because of these things. Now the travel restrictions will move away once he gets clean chit, and he will aggressively roll out expansion in the US market as well. And it will also help raising funds from prominent US financial institutions as well.
Sanjay. PR Sanjay, thank you. And that is it for Insight here in Beijing. Horizons Middle East and Africa is next. Keep it here with us. This is Bloomberg.